Hello and welcome to Startup Street. I'm Shruti Mishra and with me is Arundhati Ramanan. These are the top headlines from the startup space. Fintech player Zaggle files preliminary papers with SEBI to raise funds to an initial public offering. The IPO comprises freshly issue of equity shares worth 490 crore rupees and an offer for sale component of 1.05 crore stocks by promoters, investors and other shareholders as per the DRHP.
Suhail Samir quits as the CEO of BharatPe, transitions to the role of a strategic advisor. CFO Nalin Negi appointed as interim chief while the board searches for a new CEO. Sources say Samir had indicated intent to quit as CEO months ago and the decision was mutually agreed upon with the board.
Tata Digital's President Mukesh Bansal steps away from the day-to-day operations at Tata Neu as per a report. Bansal will no longer be involved in Tata Neu's key businesses, but he might continue in an advisory role, the report added.
Rural household-focused lender Sarvagram Solutions closes its Series C funding round at $35 million, led by venture capital fund Elevar Equity. Other investors that participated in the round were Elevation Capital, Temasek and TVS Capital Funds.
ShareChat and short video app Merge's parent company saw its losses balloon to 2,988.63 crore rupees in FY22, doubling from 1,460 crore rupees reported in the previous fiscal year as per regulatory filings. Revenue from operations increased many folds to nearly 347 crore rupees, up from 80 crore rupees in FY21, growing over 331%.
I get excited about sort of even the unique things that are happening in India using the cloud, and that's really definitely a real departure from the previous era.
Satya Nadella says that he is excited about the cloud adoption in India, highlights that the unique things happening in India is a departure from the previous era, says India has the potential to lead in the cloud plus artificial intelligence era.
Elon Musk's SpaceX is raising $750 million in a new round of funding that values the rocket and satellite company at $137 billion from investors including Andreessen Horowitz, CNBC reported. SpaceX had raised about $1.68 billion through equity financing in June 2022.
Those were the headlines that we're tracking for you this evening. But on What's Brewing today, Suhail Samir has quit as the CEO of BharatPe. The company said that Samir will step down as CEO and will assume the role of a strategic advisor from January 7th. Meanwhile, CFO Nalin Negi has been appointed as interim chief while the board searches for a new CEO. Ritu Singh joins us now with the latest. Ritu, what's the company's succession plan now?
Well, the spate of exits at BharatPe continue, with the company now announcing that its current CEO, Suhail Samir, will be stepping down from his position as the CEO effective the 7th of January and transition into his new role as a strategic advisor for the company. And in the meantime, the CFO, which is Nalin Negi, is going to be acting as the interim CEO while the board looks for the next chief executive officer of BharatPe. Now, we've been given to understand that this decision to move on from his CEO position was mutually agreed upon between Suhail Samir and the board of the company. We understand that Suhail had expressed his intent to move on from BharatPe to the board several months ago, and the board also wanted to expedite the search for the next CEO because they knew of this decision in order to stabilize the ship ahead of the IPO, which is planned for 2 years later, and therefore the decision was mutually agreed upon. But that said, Suhail Samir was hired by Ashni Rowan, so this will be sort of a clean slate for both the board and for Suhail Samir also to start over in his full-time capacity as an angel investor. Remember, he's already made a few key investments and he wants to take that up as a full-time job. Rajneesh Kumar, the chairman of BharatPe, in a statement acknowledged Suhail Samir's role, and he also said that they recognize the need to dedicate time and resources into finding the next CEO. And Suhail Samir also confirming that he will look forward to the next phase of his journey, which is going to be as a full-time investor.
All right, Ritu, thank you for those details. Suhail Samir has stepped down as BharatPe CEO. Moving on, the Ministry of Electronics and Information Technology on Monday published draft online gaming rules under which it has proposed a host of measures to regulate what is estimated to be worth a $2.6 billion industry. These proposed rules are covered under the IT rules announced in 2021. The ministry is seeking feedback from the public on these draft rules until January 17, 2023. Now, separately, Minister of State for Electronics and IT, Rajiv Chandrasekhar, said that online gaming companies would not be allowed to bet on the outcome of the games and expressed optimism that online gaming rules will be ready early next month. To talk to us about the impact of the rules on the online gaming industry, joining me now is Trivikraman Thampi, co-founder and co-CEO of Games 24/7. Trivikraman, welcome to Startup Street. The release of the draft rules brings online gaming under the Uniform Central Regulation. What do you make of this? How impactful are the rules in enabling India to become a global leader in online gaming and expand, create in India and brand India?
Thank you, Shruti, for having me. First of all, I'd like to start off by thanking both the central government and MeitY for taking this, very good, very progressive first step towards regulating the online gaming space. It's a very, very welcome move, something that we at Games 24/7 and the industry at large has been urging the government to do. I think the first thing that this is going to do is bring about a lot of standardization and regulation in how the gaming companies operate. I think it sends a very, very positive signal to the market, both in terms of investor sentiment, in terms of the message that entrepreneurs take from it. As you already know, that there are literally hundreds of gaming companies in India right now. I think with this kind of regulatory clarity starting to appear at the central government level, you're going to see a lot more startups coming out. I think you're going to see a lot more unicorns. You're going to see a lot more capital coming into the country as far as gaming is concerned. And you're going to see a lot of innovation and growth. So, it's fantastic news all around.
Given a thumbs up, but in the draft amendments, the government has proposed a self-regulatory mechanism, age verification, and a know your customer process for online gaming companies. How will this work, and are you in talks with the ministry to streamline the process?
Well, we are certainly reviewing the draft rules right now. Our teams are doing that as we speak, and we will absolutely have our inputs. As the government has called for public inputs. As far as the rules are concerned, I think they're very welcome. You mentioned KYC, age gating in terms of protecting children, but there's a number of other things that the rules bring out, which is on the side of responsible play. Things like offering players features to set daily limits, monthly limits, offering players features to set their time limits for play, time and money limits to play in general.
Sure.
To exclude themselves. I mean, we are not strangers to some of these things. Games 24/7 is part of the e-gaming federation.
Yes.
The e-gaming federation has a very rigorous code of conduct that's been in place for the last 3 to 4 years now.
Trivikraman, picking up from what you're just saying, the move comes as a response to the long demand to regulate the space, which also involves several online gaming platforms dealing with real money transactions. In the past, we've seen a few Indian states have made efforts to curb these real money gaming platforms, and amidst increasing cases of addiction and, financial risk, as per the principles laid under the rule, wagering on the outcome of a game will not be allowed. Your views on this, and does this put an end to the legal battle gaming companies have been fighting? Is there enough clarity on game of skill and game of chance now?
So I think there's definitely some confusion on how this wagering on the outcome of the game has been understood. If you read the draft rules, I think what they have done is made it very clear that betting and gambling will not be allowed. And betting and gambling is prohibited both under the Central Gaming Act and pretty much every state act in India. And I think what they have done, which is very interesting, and we are obviously studying this, is allowed self-regulatory organizations like the e-gaming federation to register games. So every game that is launched that is going to offer users the potential to both put money into the game and have the potential for earning prize money from the game, or any such game would have to be registered with an SRO. And then it is the SRO's responsibility to ensure that these games are not falling afoul of the betting and gambling laws in the country. And I think that's what is meant by the comment that you just gave around wagering on betting on the outcome of a game. Outside of that, the draft rules by themselves are actually designed to regulate games of skill played for real money. On your question about whether this will resolve all the legal issues, I think certainly this is a very strong positive message from the central government, recognizing what is a sunrise sector, and as you pointed out, is generating over $2 billion in revenues now. And I think that positive messaging should help us as an industry in resolving these legal issues. Okay. But we're still, as I said, in the process of reviewing the rules and trying to figure out how it can help in some of the issues.
All right, before we quickly wrap up, one final question, and this is on a separate note. The GOM set up by the GST Council to look into taxation of online gaming and casinos submitted its report to Finance Minister Nirmala Sitharaman last month. Though we have not yet heard from them on the framework, what are you hoping for? And on GST and TDS, which are both matters of concern as of now.
Right. No, I mean, I think, this step by the central government and MeitY is exactly what the industry needed. And the next step would be a similar progressive step on the taxation front. As far as GST is concerned, our ask of the central government has been, we are willing to contribute, we want to contribute more to the exchequer as this industry is growing. Our ask is that the GST be levied on what is our revenue, our commission, as part of the overall amount that's paid for, which is GGR, and not the whole amount of entry fees. And then as far as TDS is concerned, I think the current laws are not entirely clear. And when it comes to tax liability for an online gamer who's playing these games and potentially winning, it's not clear whether they're required to pay tax on their gross winnings or on their net winnings, which is exactly, let's say, how the stock market works, where you get to set off your losses and the amount you invested. And I think bringing clarity on the front and clarifying that it is on the net winnings that online gamers must pay taxes would be a tremendously progressive step, again, as far as the online gaming industry is concerned.
All right, Trivikram, we've completely run out of time, but many thanks for joining us on Startup Street and elaborating on how these rules are going to affect the online gaming industry. Many thanks once again for joining.
Thank you. Thank you, Shruti, for having me.
On that note, it is time for us to head into a short break, but coming up next, space tech startup Digantara is all set to launch Pushan Alpha. Details about the launch and the company's growth plans on the other side. Stay tuned. Welcome back. You're still with us on Startup Street. Now, Bangalore-based space tech startup Digantara is all set to send off Pushan Alpha, a test bed to evaluate space weather on SpaceX's Falcon 9 rocket later this evening. Founded in 2018, Digantara is working on the development of end-to-end infrastructure to address the difficulties of space operations and traffic management through its Space Mission Assurance platform. Now, the company wants to make SpaceMap a robust one-stop solution for space launches globally. And to talk about the launch and the road ahead for the startup is Anirudh Sharma, the co-founder and CEO of Digantara. Anirudh, thank you so much for joining us on the show today. It's an exciting day for you guys. You're all set to send off Pushan Alpha testbed to evaluate space weather in the Earth's orbit on SpaceX's Falcon 9 rocket this evening. So talk to us about the launch and the kind of preparations behind it.
Thank you so much for having me here. So, this is our second mission that we're doing.
Right.
At this point in time on SpaceX Falcon 9. So this is a mission that we're launching towards understanding space weather, because that is one of the important part for space situational awareness data sets. So currently we have a lot of data inadequacies, and when it comes to launch and the launch preparation, so we would have to submit our payload to the launch provider a few months before. So, at this point in time, all we can do is just wait for the launch to happen and, get the results for it. So at this point in time, what we're doing is we're working towards filling these data gaps with space weather data so that we enhance the accuracy of the data sets that we provide for space situational awareness.
All right. So once successful, can you tell me what will the impact of this that this technology will have? Share with us some use cases to understand this better.
If I were to give an analogy about this, you can consider as Google Maps, but for space, or another analogy as, just like the aviation sector, at this point in time, we have sophisticated infrastructure to track aircrafts. And when you fly from point A to point B, you have sophisticated infrastructure on ground that ensures the safety of the aircraft. similarly in the space sector when we've seen a lot of growth happening. So at this point in time, there is no infrastructure to support such a growth or understand the space activities. So this technology will enable understanding of space activities on a level where we understand where each object is moving in terms of, say, orbital environment, and thus provide this information to anyone who wants to do any activity in space, be it commercial satellite operators, launch companies, governments, and defense. Even at this point in time, space is now termed as the fourth operational domain for defense as well. So this has a lot of use cases when it comes to providing an infrastructure on space operation level.
Okay, so infrastructure on a space operational level. Now, Digantra is building a comprehensive infrastructure for space, which includes operations, space operations and space traffic management. So solving the problem on both the upstream and downstream side of things. So tell us about the various partnerships you have and how do you plan to monetize your product?
So at this point in time, we are working towards setting up of infrastructure both based in space and on ground, because at this point in time, we only track around 20,000 objects while we have more than 1 million objects that are yet to be tracked. And launching these infrastructure to space and having ground-based systems will only help us to fill these data gaps. And then we work towards building a platform just like Google Maps that I mentioned, but for space activities and providing the solution to various sectors in the supply chain of the space industry, from insurance to defense. So when it comes to monetization of this particular technology, we work on a subscription level. Basically, we sell this data on a subscription level to commercial satellite operators, launch companies. When they have to plan a mission, they can use this platform where they can work towards understanding where they should launch their satellite, and once it's in the orbit, how do they operate, and then how do they deorbit once the life cycle is done. So this is something that we do with the satellite operators' perspective. When we look at defense, it's all about understanding where each and every satellite is moving. And space has a lot of impacts on the war that happens on ground. So this technology is very essential. And it is also essential that each and every country should have sovereign capabilities towards space situational awareness, because this is one such domain which can act as a strategic importance to the nation. And when it comes to various partnerships that we have at this point in time, we work with more than 4 space agencies at this point in time, various defense agencies working towards building POCs for them. And we work with several commercial satellite operators on a beta level, because this is one such technology in the space sector, which is very niche, where we are creating awareness about the importance of having space situational awareness data sets, which can make their space operation much more efficient than it is today.
Right. So it's on a subscription model and you have a whole host of partnerships. So what's the road ahead for Digantra? If you could tell me quickly, what are the targets you've set for yourself and for this year and beyond?
So we're launching a constellation of 8 satellites as a part of our phase 1, where our entire constellation is around 40 satellites, but we're launching our batch 1 satellite, which is around 8 satellites after our push-in mission. Once this is done, what we do is we work towards building a ground-based infrastructure that can also complement the infrastructure that we have in space and provide services for the satellites which are in the orbit between 500 and 800 kilometers. That's where we see a lot of commercial traffic. So apart from that, we are also working towards providing these services to defense agencies on a global scale. We cater to several national defense space agencies. And at this point in time, what we're truly working on is we're working towards building a ground-based infrastructure for India, which we announced a few months ago, where we are establishing a ground-based observatory in Uttarakhand. And these are the plans that we have for next 3 years. And we are also setting up a 25,000 square feet mission control center to be able to support space situational activities for India.
All right, Anirudh, we wish you all the best for your launch today, and we'll catch up with you and see how that went afterwards. But thank you so much for joining us on the show today.
Moving on.
Thank you so much for having me here.
All right, moving on. Quick commerce has been the buzzword of 2022, but is quick commerce growing or waning? Ritu Singh talks to Kabir Biswas, the co-founder and CEO of Dunzo, to understand the trend. Take a look.
If you've ever had one of those sudden cravings where you want to reach out for a snack and you want it very quickly, or you went to office and you forgot something at home and you want it delivered in just the next 10 minutes or 20 minutes, or you made that banana bread you've been trying for a long time and turned out to be well, and now you want to send it to your friend across town, Well, what do? You Dunzo. The word has become almost synonymous with deliveries, and quick commerce was all the rage in 2022. But as we're starting a new year, we thought we'd catch up with the founder and CEO of Dunzo, Kabir Biswas, to find out if India's love for quick commerce continues or is it waning. Kabir, thanks very much for being with us here on CNBC-TV18. Firstly, what were the spends like? Are people spending a lot more now than they were before? Has it fizzled out? What are the trends that stand out?
Growth and first, thank you so much for coming here at the start of the year. Growth and traffic both continue to be really, really robust. In fact, we're coming off our biggest weekend ever.
Okay.
31st December is really what it is.
Of course.
Right. How do you avoid that? And I think what has happened is basket sizes have gone up. Customer retention has gone up, as well as frequency has gone up.
What is the current GMV like? How many customers are you servicing? How many PIN codes are you present in?
Super. So I think annualized GMV would be north of about $350 odd million.
Okay.
Right. Number of orders, not so much. Of course.
Food and non-food orders, if you could break up for us, monthly numbers.
Largely, 50% of the business is the quick commerce part of the business.
Yeah.
The other 50% of the business is the express package delivery business, right? On the 50% of the business, it gets run out of these 100 odd locations, right? The 50% is in number of orders and not in revenue, right? The express package delivery business is what you call, that's the one that actually goes in and generates gross margin for us, is fairly profitable, has also recently integrated really large players on it to be able to run last mile delivery for it from a growth perspective.
But how's Dunzo Daily doing?
In the whole year, we grew the category by about 25x.
Okay.
I think we should...
In terms of?
Volume of orders and revenue, both.
Okay.
Right. I think we shut down about 15 of our stores at some point.
Last year?
Last year, right? Then
Sure, but how are you looking to expand Dunzo Daily? How many cities are you currently in?
Super. So we're in about 7 cities right now, right? We, for the next 9 months, want to be able to go deeper in these 7 cities rather than go to more cities.
So there will be more dark stores in the existing
more locations
cities.
in 7 cities rather than going ahead and opening up new cities.
Any numbers you could share with us?
You would expect the numbers to go ahead and this would be partner stores and stuff like that. So could end up going ahead and getting up by about 50%.
You know, you have this ambitious revenue target overall for Dunzo, 2,500 by FY23 with 3 months to go now. Are you on track to achieve that target?
Most likely, yes.
If you could elaborate, where are you right now? How close to 2,500
So I think our revenue numbers will most likely more than 2.5x in the year. Versus what they were last year. Given numbers are still not public, etc., and there is a quarter left to go.
Yes.
But from a run rate perspective, we are 2.5x higher than last year.
We also would like to know, because losses did double in the last year, net losses. This year, how are you expecting to close the year? How much closer are you to that green line?
So the way to look at the business again is those 2 parts that I told you, right?
High margin business,
the high
and
margin,
the
what you
one.
call pure play express package delivery business, and then the quick commerce business, right?
Yeah.
I think in 2020 we got very close to being break even the overall business.
Okay.
Then of course we said that we'll invest in this category because we thought that this is a really large opportunity.
And because competitors were also moving in.
Sure, our data said that we should do this because we looked at the this and said that why would customers stick to the platform more? And we figured that we needed to be able to create a first party version of the experience that they were having. And so that part of the business continues to lose money, right? And I think the other part of the business has actually gone ahead and 3x'd. And what you call its EBITDA, positive EBITDA has become actually 3x also in the same time. Some point of time this year will be CM2 profitable.
Okay, and will you be requiring some more capital, to be able to sustain this kind of growth, to build on your expansion plans?
So we will raise capital to be able to go ahead and expand the categories to more cities.
Okay.
So one of the things that we are making a choice this year is to say that, hey, the capital that we have, we'll go ahead and use it in investing in the existing cities that we have.
Okay, so we'll let you go ahead and get on with these deliveries and follow you.
Thank you so much.
Kabir, you've just made one of your deliveries and I know you have more to do. So I'm going to keep this very short, but quickly, because we're at the start of 2023, how many orders do you expect to deliver per month? Is it going to be higher than the previous years? Any projections for the year?
So I think last year we scaled about 3x, right, for the year before that.
Yeah.
I think this year we should grow at least close to about 100%. I think it's going to be a little bit dependent upon how the first half of the year goes.
Okay.
While we go ahead and figure out our selection and customer targeting and what you call our unit economics to become CM2 profitable.
Yeah.
That will then fuel a lot of the growth in the second half of the year, but potentially another 100% growth here. And that's really what we're shooting for.
Okay, you've also had to let go of some staff, but is that phase behind? Do you think any more challenges you see in this coming year?
We don't see too many challenges coming up, but there might be what you call changes in the way we have designed the organization,
Okay.
How we have organized the company. So I think last year a bunch of the company was organized around just plain growth.
Okay.
Nothing else, right? But I think this year onwards, I think because we have found a really large market, and we are starting to become profitable. I think the design of the organization changes to have a small set, have a large part of the organization look at scalable business models, and a smaller one go ahead and look at growth. And so when you actually go ahead and do that reorganization, in that there could be some changes that could happen.
All right, before I let you go, last time we spoke last year, you said you plan to list in 3 years, that's 2025. Are you on track to do that?
We think we are on track. I think the markets need to be on track.
Okay. Are there some milestones you want to achieve before you go public?
Super. So I think the number one, and I think it's just 2 steps, right? The first one is because a really large part of our business is already profitable, we want to be able to make sure that the other quick commerce part of it also becomes entirely profitable. Given that should happen in the top 6 cities within the first 6 to 9 months of the year. Post that, we'll go ahead and try and grow again in 2024 and early 25. That should make us in about 2 years' time to 2.5 years' time, $1 billion revenue business.
Okay.
That's most likely the checkpoint that we're looking at to be able to go list.
Okay, so $1 billion in revenue, and then Dunzo plans to go
which is
public.
around 25.
Thank you so much, and we wish you a great 2023, and thank you for your time here on CNBC.
No, thank you so much. I'll go rush for my next delivery.
Thank you. We'll
Super.
not stop you from that.
Okay.
So that's Dunzo's growth plans going ahead. But with that, we're completely out of time on this edition of Startup Street. More news and updates coming up on the other side. Stay tuned.
Friends, I want to share